Welcome everyone to our Climate Chatter webinar today on carbon and biodiversity project development opportunities. Thank you very much for joining us. My name is Tara Oakley and I lead South Pole's business development and key account management team for Australia and New Zealand, and I'll be your host for today. I want to start off by acknowledging the Ballal people of the Eora Nation, where we are broadcasting from today, and also acknowledge the respective traditional owners of the lands from which our listeners are tuning into this webinar. I pay my respect to elders past, present and emerging. So just a few housekeeping notes before we go ahead. Attendees will be on mute for the duration of the session. If you do have any questions or comments, please feel free to use the question function, as we will have a Q&A session at the end. If we don't manage to get through to all of your questions, we'll respond directly to you by email afterwards. Finally, the webinar will be recorded and sent through to all attendees afterwards. So I'm very pleased to introduce you to our speakers for today. We have Brad Kerin. Brad works as General Manager leading strategy, finance, international and nature-focused portfolios for Carbon Market Institute, Australia's leading carbon market and climate action industry association. We have Lorena Vazquez, Senior Project Coordinator for the Nature-Based Solutions and Project Development team at South Pole, and she currently manages all the portfolio of projects in Australia. And finally, we have ritwik Ballal. ritwik works in our business development team for nature-based solutions for South Pole. It focuses on biodiversity net gain, co-benefits and climate change. Again, please submit any questions you have for Brad, Lorena or ritwik throughout the session for our Q&A at the end. So just a quick overview for those of you who are not too familiar with South Pole and the full extent of our business. We are a profit for purpose company and a certified B Corp founded in 2006. We enable corporates, capital markets and public sector to reduce their impact on climate action whilst mitigating risk and creating value on their sustainability journeys. There are a variety of ways in which we do this through the South Pole Climate Solutions. So we provide strategic advice to guide decision making and goal setting. We do strategic planning and sourcing of renewable energy. We do carbon footprinting to quantify your climate impact. And then compensating for your footprint through offsetting and insetting through our project development and implementation, which is the focus for today's webinar. We also help companies assess and plan for corporate resilience through our in-depth climate risk analysis and modelling. We even go as far as innovative climate finance solutions for large investments through our climate funds too. We deliver these services to clients globally. We've got over 700 in our team now, made up of consultants, scientists, project developers, finance experts and more all over the world. So there's a lot going on in the carbon markets at the moment. As some of you may be aware, there are more companies increasing their ambition with net zero targets. We've just had COP26 as well, which has been very big in the news. We've seen a really significant shift in the voluntary carbon market in recent months. So I'm very pleased to have Brad joining us today to provide his insights on the voluntary carbon market. So Brad, thanks so much for joining us.
Thanks, Tara. Good to be here.
Excellent. So I'll ask a few questions here. I'm sure you could talk about them for hours on end, but if we could try and rein it in for a couple of minutes, we'll see how we go. What do you think are the key takeaways for Australian businesses from COP26?
Yeah, it is a hard question to distill down everything that happened there and try and understand how it's relevant to Australia and Australian business. Before I get started, I do want to add my acknowledgement of country, the elders past, present and emerging of the Wurundjeri people of the Kulin Nation from the country which I'm joining you. So COP26 is an interesting beast for any of you on the call who've ever been or logged into different things. It's an exercise in trying to compromise as much as possible in terms of trying to get agreement on really difficult technical things and trying to take account for the agendas and priorities of nearly 200 countries. And so what I've heard from some negotiators sometimes is the best outcome is when everybody's equally unhappy, but that you're still making progress. So it is interesting watching what comes out of COP. And unremarkably, there's always criticism of COP and criticism of the outcomes and that push that we have to be more ambitious and we have to move further, and rightly so. What we do see out of this particular UN Climate Summit was that global ambition for climate action was boosted, but we recognise that more action and ambition is critical this decade to be undertaken by countries, by companies, by society in general. And what that means is that Australia and other countries like Australia that are trade exposed, have high emissions sources, will be under greater scrutiny over the next year at COP27, and when they do a global stocktake or review of how countries are tracking against their Paris targets at COP28 in 2023. One of the key things that came out of COP is that we finally have the rules for Article 6, and for those of you who don't know Article 6, it's the rules of how carbon markets will evolve within countries, between countries, and then globally. And what we got out of those rules that they've been negotiating on for 5 years is critical bridging proposals, I suppose you could call them, or key compromises around a lot of technical critical elements that now we have those rules, and they mean that we have a platform for high integrity, transparency, and accountability, but it will require corporates and countries to be really vigilant on the integrity of emissions reductions, of units created, of pledges made, and also the emissions reductions, the numbers that they report into the UNFCCC. A couple of other points. Alongside the formal negotiations, there's always a lot of side events at COP. There's a lot of pledges made, a lot of announcements. And one of the things that really came to the fore this year was around capital cost and investment. And so one of the key takeaways for us is that global capital costs and risks are rising for carbon intensive countries and companies and the projects that particularly generate emissions intensive energy. And so amidst this deeper investor activity, scrutiny, that corporate disclosure piece and requirements around disclosure and management of climate risk and finance is going to be more and more critical. So that's probably a couple of the key ones. On that sort of finance piece, there has been a bit of a failure to deliver on public and private finance, climate finance pledges. That sort of adaptation piece, financing adaptation for vulnerable communities, small island states, and others that are feeling the impacts of climate change right now. And that remains a stumbling block for countries who have had the majority of the impact on the globe, that their commitments on climate finance aren't reaching those goals that we need. So there's a recognition now globally that we need to double adaptation funding, and there will be an increasing dialogue around loss and damage that is really, it's barely keeping developing countries at the table, and that those issues will really be important next year and centre focus. The final two areas are really around the phase down and phase out of coal and fossil fuels. And throughout COP, we were heading towards a final decision that was saying and recognising that we need to phase out fossil fuels, but unfortunately, right at the last minute in the closing plenary, India India on its own really stood up and said, no, we can't support phase out of coal. We need to support a phase down of coal as well as a phase out of inefficient fossil fuel subsidies. And it's unabated coal. So there is some language there that softens it a bit, but what it does tell us is that there is, perhaps slower than we would have liked, but a trajectory towards phasing down and towards less dependence on coal and on fossil fuels that's underpinned by research by the IEA, the International Energy Agency, and many others. Finally, that big piece that comes out of COP and has been increasing is the role of nature. We understand from many reports and many international bodies is that nature is 1/3 of the solution to climate change. And what really came into the discussion this year was an acknowledgement that we're facing a climate crisis as well as a biodiversity crisis, and nature is a key pillar in looking at both of those. We also saw in the Article 6 rules and final decisions was an acknowledgement of co-benefits, the need to take action on other sustainable development goals and the role of nature in doing that, and also supporting the rights of Indigenous peoples, human rights, access to water, eradicating poverty, vulnerable communities. So there is now a greater emphasis on the importance of protecting, conserving and restoring nature as well as ecosystems. So that's forests and other terrestrial and marine ecosystems, and using those as a source to drive net zero emissions. So in the context of Australia, Australia is well positioned to become a global leader in nature-based solutions development, in the knowledge brokering, the finance, capacity building, measure reporting and verification. But it needs to nurture, Australia needs to nurture its crediting mechanisms, ensure integrity, and look at other ways that investment in nature and accounting for nature-based solutions can be built into other structures that we have. So there's a lot on the table. I think shared in the chat, there will be a link to our key takeaways from COP26, which outlines in much more detail than I can here some of those key points, as well as an explainer of Article 6 and how that works. So I'd encourage you to take a look at that. But yeah, there's a lot that has come out of COP, and it will have a lot of impact on where we're going from here on in.
Thanks so much for that, Brad. I'm actually impressed with how succinctly you've managed to put that together for a 2-week event and everything that went on there. So yeah, kudos to you. So, I mean, it's really exciting for us to see companies getting engaged with climate change and what they can do. Where do you see the most interesting opportunities for Australian companies to be part of the net zero transition?
I'd say there's probably 5 key areas. One is around our capability and the need to invest in nature. Second is around climate finance. Thirdly is the role that Australia can play in exporting low carbon or zero carbon energy and emissions reductions units, carbon credits, to the Asia Pacific region and supporting that regional decarbonisation. Fourthly, it's the role of carbon markets development and leadership, that knowledge and expertise we have over the last decade and a half in developing markets. And then it's also the capability to understand how we better manage data, build technology and innovation, and calibrate that and deploy that at scale. So I guess to unpack that a little bit further, I'll probably go in a bit of a different order. The investment in nature and the role of carbon market development and leadership. We've got a decade, particularly through the Carbon Farming Initiative Act, what's now transitioned into the Emissions Reduction Fund. What we've got in the market is a lot of knowledge, experience and expertise in how to undertake projects, how to manage the finance, the risk, the measurement, reporting, verification, the application of technology, understanding a really world-class regulatory framework that interlinks with other government frameworks around giving financial advice, around consumer protection, other bits and pieces that I guess we take for granted, and there's ongoing criticism of it, and that's fair. But what we have here is well and beyond what other countries have. And so we have an opportunity to invest in that infrastructure, invest in that knowledge, and to be able to take that out to other countries. On the financing piece, you know, Sydney particularly, but Australia's finance market is really nimble and innovative. And there's an opportunity there for the finance community in Australia to develop the low carbon, zero carbon financial products and services that can enable investment at scale in technologies, in emissions reduction projects, in those step change technologies that are required to decarbonise the economy. And so what comes out of that is the opportunity to invest in data management and technology innovation. What are we going to need in the next 10 years to get to a place where decarbonisation, zero carbon activity is business as usual? How do we make sure that our accounting of that, of sustainability, of emissions reductions, is integrated with our financial accounting and reporting? What are those tools that we need to integrate this into business? We've got the capability here. We've got CSIRO. We've got a lot of small businesses that are developing these tools. And then we also have that capability with the huge landmass and many different well-established and mature industries to take technologies from overseas and calibrate them in our existing operations, understand how they get deployed, and then take that knowledge back out to the world. Finally, on that point, we do sit in the supply chain of most of Asia. Our top 10 two-way trading partners all have net zero commitments, mostly by 2050. And so what that means is that increasingly those countries and the companies in those countries are going to be looking for low carbon or zero carbon inputs, particularly energy. So what's the role of Australia to be able to export energy and other solutions into those markets and to support those decarbonisation opportunities? So I think there's a lot that Australia can do, but it does require people to be conversant in climate change and business and decarbonisation lingo. It requires people to come to webinars like this and to meet people and understand what they don't know yet, and to be able to position ahead of these changes that are coming so rapidly now.
Yeah, and it's really interesting that you say there about bringing carbon accounting in with financial accounting, because, you know, if we look at the Australian Carbon Credit Unit, or ACCU, and what's happened with the price of that in the last couple of months alone, it's doubled from $20 to $40. And, you know, it really is demonstrating that it needs to be part of financial accounting as well. We have to bring both of these together. And I think that, you know, the change in price is really going to drive that. So what do you think have been some of the drivers of the market recently?
Yeah, look, it's the spot price is fascinating to look at. It's been such a short time frame to see a market explode like this. What really, you know, and hitting $40 a tonne for an ACCU today on the spot market is unheard of. And for a lot of people that have been modelling this stuff, $40 a tonne is what they were thinking we might get to in 2030. And, you know, it's 2021, not even 2022 yet, and we've hit those values. And what that says is that there's a lot of factors that are kind of coming to a bit of a clinch point. One is the basic, you know, supply demand price curve, basic economics. If there's low supply, there's increasing demand, the price is going to go up. So that's pretty much what we're seeing here, is that we've got a lot more businesses coming into the market looking to purchase Australian carbon credit units. There's very low supply, mainly because the majority of the carbon projects that have been developed in Australia have been contracted directly with the government. So the government's been the primary purchaser of abatement in Australia, and so there's been very little abatement available to the private sector. So there's a lot of activity happening, a lot of emissions reductions projects happening, but it's all going to the government and being reported to the UNFCCC. So you get this this difficult space where you've got a lot more people wanting to enter the market, and they're being forced to buy small amounts of ACCUs, or looking at forwards markets. There's probably next year going to be some emissions exceedance under the safeguard mechanism, some liability, because we're seeing some forward trades for delivery in February 2022, February 2023, and that is the timing that really companies have to true up to manage a liability under the safeguard mechanism. So there are probably, whilst we don't have full visibility on that, there's probably some emissions exceedance, some compliance that requirements that are driving that investment, as well as just a general interest from corporates, from state governments, from other subnational actors, cities, communities. And then what's driving that? It's the broadening understanding that climate change and climate risk and the climate crisis is here and it's impacting us. And wanting to actually start to do something about it. We're seeing an increasing sophistication of climate strategies within organisations, and an understanding from boards that there's a fiduciary responsibility of that sort of in that governance space to look at the risk of climate change to the business, and to take on board the increasing you know, response from investors scrutinising what you're doing about climate change. So it's investors, it's communities, it's subnational policies. It's not necessarily in Australia, but internationally, it's national policies. Where I don't think we're quite there yet, given the government's focus on a voluntary market. But a lot of these things are hitting us now pretty quickly. So, but the one thing that I think this doesn't tell the full story about is that longer term trajectory of emissions reductions of carbon credits. What we're hearing anecdotally is that there's a lot of companies that have done the strategic piece. They understand what their liability or what their net zero trajectory is over the next 3 to 5 years, and they're starting to invest in longer term offtake agreements. So they're contracting directly with project developers or intermediaries to say, I'm going to have this liability in 2023 and 2025. I want to invest in projects now at a fixed price, or, you know, a certain price, that's going to definitely be lower than that $40 a tonne spot price. And that activity is increasing more and more, but we don't see that because that's all commercial in confidence, and there's a competitive edge to keeping that stuff quiet. So that really depends on talking to companies like South Pole and others who have some of that knowledge about what you should expect, when you should be looking for delivery of those units and use of those. I think this is a market that is moving and changing, and as you can see with those prices shifting so quickly, that we need to be able to think ahead. It's not enough anymore to just come into the market and go, right, I need this now. You need to think ahead.
Yeah, and I think that completely mirrors what we're seeing as well, and the kinds of requests that we're getting now. It's moved away from that annual spot purchase to actually, okay, how can I secure a price in the coming years to make sure that we're fully equipped to prepare for this. So one final thought from you, Brad, kind of how do you see the market developing just in the next year, potentially beyond, and what are going to be the challenges for buyers in that market?
Yeah, look, a couple of things spring to mind. Well, three things really. One is that we have the rules around Article 6. We have the high level framework and structure, but over the next 12 months and at COP27 next year is when a lot more of the detail is actually going to be developed, and that's when we'll understand a bit more. So carbon markets can start to develop now. We have the clear rules, but I think there's still more to unfold and understand about how things will actually work on the ground. So keeping a close eye on that, being able to understand what those issues that are being negotiated are likely to be. One of those is Article 6 includes the use of emissions reductions and removals. But one of the things for negotiation at the end of next year is whether avoidance activities will be included, and that impacts some project types in Australia, including potentially things like savanna burning, really critical Indigenous-led projects that have so many more benefits than just the carbon. So there's some of those things we really need to understand how the market's going to transition, and Article 6 and understanding how that's going to work will continue to be one of those things. Avoided deforestation is another one of those. That's sort of internationally REDD plus other activities that conserve really important existing rainforests and other things. The second, kind of aligning with that point, is I think 2022 is going to be the year of integrity. Really what's come out of COP and increasingly from strong green groups and a lot of other reports is the questioning whether emissions reductions are additional, whether they are post 2020, whether they are actually real and meaningful emissions reductions. So what's going to be critical for countries like Australia who have a crediting scheme, and for companies that are buying carbon credits, is to really understand the environmental integrity of the units that they're investing in. And that it's really technical. It's a, I suppose if you compare it to other commodity markets, a grain market, you can pick up a bag of grain, you can put the grain in your hand, you can taste it, you can smell it, you can maybe ask a couple of questions, but you kind of know if it's good or not. With carbon, you can't pick it up and touch it. You can go out to a project, but there's so many unknowns about that project, about how they measure, report, verify. Do they pay communities? Have they got Indigenous community consent? There's so many more of those things that you have to understand. And if you don't understand that and you make a bad decision, the scrutiny on your net zero claims and the use of those units is going to come down on you pretty hard. So it's really important for buyers to understand what they're investing in and to understand those things that they don't know yet. So you need to build your own capacity. You need to have relationships with experts, talk to people like South Pole that have lots of experience, and to know what the questions are that you need to ask to get that information. I think with Australia having a net zero commitment, this big focus on carbon and climate change, there's a lot more financial operators and businesses sniffing around the edges. So venture capitalists, other organisations that might want to jump in and make a quick buck, as they often do in other markets that sort of surge and then sort of flatten out. And so one of those things you're going to have to be really aware of is the behavioural integrity of the market as it expands and shifts. how are people going to act? How do you protect yourself? And so the Carbon Industry Code of Conduct is one of those things that sort of sits there as a voluntary consumer protection watchdog in Australia's carbon industry to really try and understand how we protect consumers and clients of service providers, of financiers, of others that provide advice. So I think it's watching markets, it's making sure you understand integrity and how to do your due diligence and manage risk. And then thirdly, the impact potentially of, well, the impact of an election early next year and ongoing negotiations as we move into an Australia with a net zero target.
Very handy tips. Thank you very much. I think that's all we have time for in your section for now, Brad, but thank you again for your insights. And yes, take a look at the link that's been posted in the chat there for further information on what Brad has been speaking about.
I would just a final point, to understand all of that integrity stuff, the capacity building, it would be remiss of me not to do a shameless plug for our 8th Australasian Emissions Reduction Summit, which is coming up on the 9th and 10th of December in person in Sydney, as well as virtually online. And that's probably a good primer to get you across a lot of these issues as they come.
Fantastic. Thanks, Brad. We'll see you there.
See you there.
Perfect. So just before we head into the next part of the webinar, kind of around the project development piece, I think it's important for us to take a step back and make sure we're all on the same page. Obviously, corporate climate targets are one of the key drivers of demand in carbon credits at the moment. And this, sorry, slightly complicated chart here provides an overview of some of the key or buzzwords that we're seeing at the moment. So if we start off with climate neutrality, this is kind of where we really should be today, calculating your footprint and then compensating your emissions through offsets. You can be certified by companies such as South Pole to verify these claims as well. And then we move to net zero, and net zero is really a journey. So you can see that here looking out to 2050 in this example. And this is about decarbonising as much as possible, which is that yellow part of the chart that you see there, the decarbonisation within your business, and then removing any residual emissions from the atmosphere through removal projects. Until recently, there wasn't actually a standard on net zero globally, but the SBTi has recently released their net zero standard. So if you do want to ensure that your own net zero targets are robust and are aligned with the latest science and in line with this standard, then please do reach out to us. And then we go into climate positive, which is a step further than that, where you then begin to move or remove even more carbon from the atmosphere than you emit. There's no official standard on this at the moment for making these claims, but will kind of be the next generation of where we want to head to. So what I really wanted to point out on this chart is the green and the blue areas, which is actually about the offset side of things and where this project development comes in. So the green section refers to avoidance credits, which Brad mentioned earlier. Essentially, it was the introduction of the project prevents us from emitting carbon elsewhere. So that's things such as renewable energy projects or avoided deforestation. And then the blue section is looking at introducing removal projects and bringing more of those in over time. So that's actually taking carbon out of the atmosphere. So projects such as reforestation or soil sequestration. And these are incredibly popular at the moment. And I think it's important to note that, the global economy does need to transition to renewable energy, and we do need to prevent the destruction of mature trees that sequester large amounts of carbon. It is vital that we continue to do that, which is why we see both of these types of offsets being part of your journey. And then just next slide, please. Perfect. So just a few of the snapshot headlines that we've seen recently. The ACCU market and global voluntary carbon market, as the demand and price trend is the same as we've mentioned earlier. They have kind of been skyrocketing in the last few months alone. So typically companies used to go once a year and buy credits, and this is becoming harder, and higher prices and less options are making it harder to meet companies' requirements. So as mentioned earlier, we're getting a lot of questions from our clients about how they can be more proactive and protect themselves from these increasing costs and supply risks for carbon credits. Especially those with net zero targets. So that's really the why of why we put this webinar together. And now I'll hand over to Lorena, first of all, to talk about the how. Over to you, Lorena.
Thanks, Tara. All right, so it's very exciting to be here and to talk to you about the different solutions and the different options that South Pole offer to clients to go through their decarbonization strategy or their net zero commitments. So yeah, please, next slide. All right, so there are different options, as I said. So the first one is to offset your emissions, you can just purchase off-the-shelf carbon credits. So these are credits that are available from existing projects, and this is a practice that South Pole does on a daily basis. A second option is to exclusively offtake credits from a specific project. So you access to all the credits from that specific project during a certain period of time or during the whole lifetime of the project. The third option is to develop your own project, and that's what I'm going to focus on this presentation. The fourth and the fifth options are also solutions that South Pole offer. However, those are managed by a different team within South Pole. So if anyone has any questions about them, just reach out to us and we will redirect you to the right team. Yeah, please, next one. All right, so in terms of turnkey projects, with this slide, I want to show you an overview of what happens throughout the lifetime of the project. So first of all, you establish your project. So you can see the little trees there, they are absorbing carbon from the atmosphere. So 1 ton of carbon dioxide sequestered or avoided from the atmosphere equals to 1 carbon credit. Then the project needs to be certified by a robust standard. I'm going to talk about standards and labels in the next slide, so I'll just continue explaining the process. So once it is certified and you start your project, you wait until a certain time has passed in order to make a claim of credits. And once you receive the credits, you will decide what to do with them. You can sell them in the carbon market to corporates that are willing to offset their emissions, or you can use them for your own, for offsetting your own emissions. So that is called insetting. It's a common term in the carbon market. So you reduce your footprint by insetting your emissions with your own carbon credits. All right, next one, please. Okay, so these are the different standards that we work with globally and in Australia. So the first 3 ones are the most common one in Australia. The Emission Reduction Fund, which is managed by the Clean Energy Regulator, which is a independent body from the Australian government. Then we also have the Verified Carbon Standard, also known as VERA, which is probably the most known standard internationally, and the gold standard as well, very well known and very popular. We also work with the American Carbon Registry, the Climate Action Reserve, and with the Clean Development Mechanism under the Kyoto Protocol. And in the bottom, you can see also a few other labels for certification of co-benefits. So we have the Accounting for Nature certification, which is Australian and is highly promoted by the Queensland Government Land Restoration Fund. We also have the CCBS, which is the Climate and Community Biodiversity Scheme from VERA, and the Sustainable Development Verified Impact Standard, also known as SCVISTA from VERA as well. So, and the fourth one is the social carbon, which is applicable to projects that ensure improvement of livelihoods through their projects, right? All right, so yep, the next one, please. Okay, so in this slide, I just want to give an overview of the whole process. So when you start until the credits are issued. So we start assessing the land where the project will be established. We conduct a very detailed feasibility study. We engage with the different stakeholders. We check the land rights. We run a cost-benefit analysis. We assess the risks of the project. We conduct different geographical and climate assessments, amongst other criteria that are required under the different standards, the different carbon standards and methodology that will be applied to the project. Then some standards, specifically Vera and Gold Standard, they required some previous paperwork before registration. So that includes a project description document, and well, the one that has to be audited in order to be registered. That is not the case with ERF. So with ERF, other requirements are in place. However, you can just register your project straight away. The next step is implementing the project, doing the activities on ground and monitoring that implementation for the whole lifetime of the project. Then once you have a certain time has passed and you're ready to claim credits from your project, you have to, well, South Pole, we gather all the information from the project. We estimate the carbon abatement that occurred during that period of time, and we prepare a report to submit to the standard, the one that needs to be verified, so audited, in order to be approved by the standard. And the next step then is just wait for the carbon credits to be issued. This could take between 2 to 3 months, regardless of the standard. There could be some observations from the standard, however, this is not the normal case. And then once the carbons that are issued, you will decide what to do with them. I'm going to cover that section in the next slide. But generally, these steps, so steps 4, 5, and 6 are repeated throughout the whole duration of the project. And in terms of reporting frequency, it obviously depends on the standard and the methodology. But in general, we can expect to be reporting between 1 to 5 years, and different methodologies have also different lifetime periods. So we can expect something between 7 years and 100 years. Yep, next one, please. All right, so what happens next? Once you receive your credits, so you have your first vintage of credits from your project, there are different options. So the first one is just sell them in the spot market, which is very, the demand is increasing exponentially, and there are always buyers willing to purchase your credits. So that's one option. The other option is that if you have a project certified by the ERF, and your project generated ACU, so Australian Carbon Credit Units, you can sell them in the Emission Reduction Fund auctions. And normally these auctions set the floor price of the ACU, so normally they are cheaper, or the price is lower than the spot market. And then you can also use them to retire the carbon credits against your own footprint, so for insetting purposes. And there are some methodologies that are exclusively for insetting. Gold Standard has some of them. So if the purpose of your project is to retire your own credits, then you can use those specific methodologies. All right, so next one. Okay, so I just want to talk about then the different nature-based solutions. So I have grouped them by subject. So the first one, and is the one that is gaining lots of popularity and a lot of interest from corporate buyers in the carbon sector, is blue carbon. So blue carbon is the carbon that is stored in coastal and marine ecosystems. So this includes mangroves, tidal marshes, and seagrasses. and they have it's estimated that they have the capacity to store 3 times more carbon than tropical forests. So, by saying this, there are 2 methodologies under Verra for certifying blue carbon projects. We currently have 3 projects in Indonesia under one of the Verra methods. And there will be 1 methodology coming up very soon from the ERF. So it is supposed to be released anytime now before the end of the year. Then we have soil carbon projects and also different agricultural land management projects. There are multiple methodologies and multiple standards that certify this type of projects, and they are very the interest on these projects are increasing exponentially as well. Not only because they produce carbon credits, but also because of the different productivity benefits that they provide to the landholders and the farmers that apply these methods on their lands. So basically, it's storing soil carbon in the soil. So that's what it means, and that can be done by regenerative land management practices. Yes, so I was saying that there are multiple methodologies that certify projects under that method. And then the next one that I also want to touch on is livestock management, and there are multiple methods as well. The most popular ones are the livestock feed additive methods. So there is one from Verra, and there is currently increasing interest in Australia, and further research have been prioritized by next year for developing a project from the ERF. And we currently have 3 projects, so 2 in the United States with Verra and in Switzerland as well. So 1 in the United States and 2 in Switzerland. So basically, you feed the cattle with feed additive that will help reduce emissions, methane emissions, and that's what you claim as your carbon offsets. And then the other method that it's also embedded in this section is beef cattle herd management method under the ERF. We have 2 projects under that method, and they're actually pretty efficient. Well, with those two projects, we are expecting to receive about 90,000 ACUs from each of the projects, and they are focused on reducing methane emissions by increasing live weight gain in a shorter period of time. Yep. So the next one, please. All right. So that's a map showing some of the projects of the agricultural and blue carbon projects that we currently have. Yeah, and the next one. All right, and then there are 2 other solutions, also very important to highlight. So the vegetation management methods. Most of all the carbon standards have vegetation management methods. This includes regeneration, reforestation, avoided deforestation, revegetation, human-induced regeneration, REDD+. Like there are multiple ones that have been used throughout, the development of the different carbon standards. And the savanna fire management methods. We have 2 methods under the ERF, one for sequestration and emission reductions, and one for just emission reductions. And we have 3 projects in Australia under the emission reduction methodology, which focuses on preventing wildfires during the late dry season by implementing activities such as planned or prescribed fires during the early dry season. Yes, the next one, please. So yeah, again, just some examples of the different vegetation projects and the fire management projects in Australia. And just to finalize, yeah, so what can you do, just to summarize what I explained before, If you have land holdings, or if you are willing to implement your own project to generate your own carbon credits, just reach out to us. So we can help you identify the different decarbonization pathways. We will assess your natural capital. If you are an international corporation, we will design an international carbon procurement and generation strategies applicable to multiple assets across the world. I will help you with the development of your project under a specific standard. We will identify as well different biodiversity and social benefits that could be applicable to your project. And once the credits are issued, we will help you participate in the carbon market. And that's all from me.
Thanks, Lorena. Hello, everyone. It's a pleasure to be here today. I would like to start by addressing the relevancy of biodiversity in today's conversation. So basically, why consider biodiversity or why incorporate biodiversity into your climate strategy? So we believe that both biodiversity and carbon projects have the same goal, that is to reduce the impact of climate change. So where carbon and biodiversity projects can align is in the adoption of a biodiversity-based, adaptive and mitigative strategy. So mitigation is described as a human intervention to reduce greenhouse gas sources and enhance carbon sequestration. Whereas adaptation is basically enhancing the resilience of ecosystems. So some examples are maintaining and restoring native ecosystems, protecting and enhancing ecosystem services, or just maintaining habitats for endangered species. So we have spoken in length about reducing your footprint and net zero, but the next step is really being nature positive. And this requires net gains to biodiversity and biodiversity action. Next slide, please. So yes, so what have been some of the drivers for biodiversity action and what is changing in the market? Well, of course, as you know, there are some new mandates that have come in, such as the Finance for Biodiversity Pledge, the Task Force for Nature-related Financial Disclosures, and we have the COP15, which is a UN Conference for Biodiversity, to be held in Kunming in China next year. Biodiversity conservation financing has historically been dominated by the public sector, representing over 50% of the available financial resources. So we are now seeing a rising interest in this space by private investors to bridge the financial biodiversity conservation gap that I'll touch upon in the next slide. But we are generally seeing that companies now want to move ahead of regulation. It is also a reputational issue for some of the companies, as customers are now increasingly demanding for sustainable products and services. Next slide, please. Yeah, look, if you find the figures in this slide too overwhelming, I just want to touch upon some key topics. So basically, to bridge the financial conservation gap, this will not be closed unless significant efforts to reform harmful subsidies to biodiversity and scaling up private investment towards biodiversity conservation. So this was a research that was conducted by a UN-based initiative known as BioFin, and they predicted that in 2030, the financial gap for investing in biodiversity would be in the tune of 457 to 632 billion US dollars. Now, currently, we are seeing an investment of around 123 to 143 billion dollars. And as you can see, this private investment in biodiversity needs to significantly increase by 2030 if we have to bridge this financial gap. Next slide, please. So yes, briefly touching upon COP15. So if you may not know this, COP15 is a UN biodiversity conference. The first leg was held in October this year, which was online based, and the second session will be held in May next year, which would be face-to-face. Basically, the objective is for governments from around the world to agree on a new set of goals for nature over the next decade and decide what the post-2020 biodiversity framework is going to be. Now, the first draft of the post-2020 global biodiversity framework was published in July, along with the Kunming Declaration, which was passed in October, which focused on ecosystem-based approaches, which is also referred to as nature-based solutions. So the focus is going to be on nature-based solution. And this is where lies a great opportunity because, could you go to the next slide, please? Next slide, please. Yes, because South Pole's approach follows the nature-based solution concept. So Lorena has already touched upon nature-based solution in the carbon space, but I would like to touch upon nature-based solutions from a biodiversity perspective. So, of course, there is a very strong compliance market here in Australia, especially in New South Wales, for biodiversity offsets. So this is known as the New South Wales Biodiversity Offset Scheme. So major project developers in New South Wales need to offset their impacts on biodiversity by retiring biodiversity credits. So what are biodiversity credits? So they are a tradable unit that measure the impact of the operations on ecosystems and species respectively. Now, South Pole specializes in designing these tailor-made biodiversity credits for both the compliance market and also the voluntary market. Now, speaking about the voluntary market, there is a great opportunity for corporates to be involved in the voluntary market as well if the compliance market doesn't apply to you. So Lorena has already touched upon nature-based solutions for climate mitigation, but I would like to touch upon nature-based solutions for pro-biodiversity investments. So these are any additional action towards carbon emissions reductions and removals. So implementations of forest protections, sustainable ecosystems, management of and restoration activities to generate environmental credits. So there are very unique environmental credits that are being developed in the market today. So we have, so we already know about biodiversity credits in the compliance market, but there are also other unique credits such as reef credits. And what South Pole has developed is Eco Australia credit, which is stapling an international carbon credit with an Australian biodiversity unit, which aligns with state-based biodiversity compliance schemes. Next slide, please. Yes, owing to time, I won't go into detail about this slide, but what I'm trying to explain here is that a lot of people want to do a carbon project and a biodiversity project on the same land. But what we suggest is a landscape-based approach, such can be seen in this slide here. So basically understanding which ecosystem is best suited for the kind of project that you're looking at. So which ecosystem is best suited for a carbon project and which ecosystem is best suited for a biodiversity project. And of course, Lorena has already touched upon globally recognized standards that can measure biodiversity as a co-benefit to a carbon project. Next slide, please. So yes, the major question is, how do we get started? So the first step is, of course, corporate integration and analysis. understanding your direct and indirect impact of your company's operations on biodiversity, assessing what sites are best suited for biodiversity or carbon projects, and then coming up with science-based targets for nature. So this forms a part of the project development phase, which leads and segues into biodiversity action, which forms a part of project implementation, where you can leverage this action to become a pro-biodiversity business and use them in your accountability and your disclosures, such as the Task Force for Nature-related Disclosures and various other global standards. And of course, the last step is communication, which can then align to your sustainability strategies. So yes, that's all my time for today. I'm happy to answer any questions in the question answer session. So thank you for your time today.
Thanks very much, Ritwik, and thanks to you as well, Lorena. Very, very useful insights there. I'm very conscious of time, so I'll whiz through these key takeaways and perhaps we'll be able to squeeze a question at the end. So obviously in Brad's section here, markets are evolving very quickly. Both buyers and sellers will need to manage and appropriately communicate the environmental integrity of their emission reductions. I think we've made that very clear. Participating in carbon markets requires a sophisticated technical understanding, diligent attention to coming trends, personal capacity building, and forming expert relationships will help to inform and reduce the risk of your participation. As Brad mentioned, you can come to companies like South Pole who've been doing this for a long time, and we're happy to share that information with you. It's important to us to keep the integrity of the market as well. Looking more in Australia and at landowners, you have the opportunity to explore exciting opportunities for agriculture, blue carbon, vegetation and fire management projects, and do reach out to us if you'd like to have that conversation. Also working with a partner to determine the best carbon standard, project methodology and commercialization strategy for your project and align it with your broader climate strategy. Again, please do feel free to reach out to us if you'd like to discuss this further. And finally, private sector plays an important role in bridging the global biodiversity conservation gap and scaling up private investments towards biodiversity conservation, such as nature-based solutions. And thanks so much for your information there, Ritwik. I think there's lots of exciting topics to come out of that. I'm not the only, Brad's not the only one who can do a shameless plug here, so I will just skip to the next slide and just let you know that we are hiring in this space at the moment. So if you would like to be part of the Penguin family here, please visit our career hub. There's some fantastic pictures of us making penguins there. We have a lot of fun as well. If you do want to be involved in this space. Now, very quickly, we've got a couple of minutes left, so I'm going to go and pick a question from the audience. We do have quite a few, so we'll get back to you via email if we don't manage to get to your question today. One that's jumping out at me, I'll go with Ritwik. Can a biodiversity project be on the same land as a carbon project? And you've got 2 minutes, no pressure.
Look, for a biodiversity credit-based project, we will have to align a federal-based carbon project with a state-based biodiversity scheme, because trials are underway for a federal-based carbon and biodiversity scheme, but these are just trials at the moment. But at the moment, for example, the New South Wales biodiversity scheme doesn't necessarily allow a carbon project on the same site, which is why we suggest segregation of the land and one site dedicated for a biodiversity and set as a biodiversity stewardship site, and the other site set as a carbon project, depending on the ecosystem that is best suited for those kind of projects, which is why I brought up that slide, which is a catchment area, which segregates these land parcels. And of course, as I said, you can always use globally recognized co-benefit certifications, such as land scale, accounting for nature, and various others to certify your carbon project with the biodiversity as a co-benefit.
Fantastic, bang on time. Thanks so much, Ritwik, and thanks again, Lorena and Brad. It's been fantastic to have you all here today. Thank you, everybody, for joining. That's all we've got time for, and we hope to see you for the next episode of Climate Chatter. Thanks, and have a good day.
Thank you.
Thanks, everyone.